Hello traders, this is Blake Morrow and you are listening to the week ahead video for July 1st, 2018 and welcome to this week's video. So we have so much to cover and it's still fairly early in the weekend for myself. Before you're obviously watching this video, other things can hit the wires beforehand. So I've got to talk about everything that's happened, things that are happening this next week. But before I do that, a little bit of housekeeping. This is the last weekend before our price increase of ForexAnalytix. So if you want to get involved with ForexAnalytix, this is your last chance to get these prices. This is the tier 3. We're going to be moving to our new pricing as of next week. And so get signed up today. You might as well try it. You've been watching these videos and some of you have seen us in action. You've seen what the platform looks like. Get it before we raise our prices, because we have to do it to bring it up to kind of the competition level, even though we're going to still be well below the competition moving forward. But once you do that, make sure you download our mobile applications. Whether you're on iOS or Google Play, download the mobile app as soon as you get it, so you can take advantage of our full whoops, sorry, need to go over to go to the dashboard here. So you can take advantage of our full suite. Okay, so enough about that. Make sure you get signed up this weekend, like today. All right, now let's talk about this next week. This next week is going to be a busy week, even though it is the 4th of July holiday in the US, and a lot of North American traders have left for vacation or holiday this weekend. So a lot of traders from New York are up in the Hamptons or different parts of the Northeast, enjoying the long weekend with their families, and the liquidity is going to be poor. I guess that's the point I should make, is that the liquidity is going to be poor, meaning that you might see a little bit more volatility because of the lack of liquidity in the markets. But there's a lot of things happening this week that could create extra volatility. So I think if you're not on holiday, you're not on vacation, this is a week you want to be paying pretty close attention to what's happening in the markets. Now, the big deal going into next week, and the biggest event risk, in my opinion, is going to be the fact that we have a lot of tariffs that are going into place in Canada and in Mexico going into this week and into the end of next week. We're also talking about the potential for the China's response to U.S. tariffs. Also India, Turkey, Russia. They may have retaliation plans. We have Canadian and European counter tariffs go into effect on Sunday, and then Mexico on Thursday. Then we have the Mexican election on top of that. So the trade, I know some people call it dispute, some people call it war. It's going to intensify going into this next week, and so that, coupled with less liquidity, is probably going to equal higher volatility. On top of that, and I know I haven't even gotten to the charts yet, and some of the important stuff here. Over the weekend, President Trump, he said, and he tweeted that he spoke to the King of Saudi Arabia and explained to him about the Iranian and Venezuelan oil situation, asked him to increase oil production. And so he tweets that he has agreed, and he was stating that prices are too high. So I have crude oil actually on my chart here that I wanted to show you. Crude oil went out at the highs on Friday, and we have been in a pretty significant rally just over the course of the last week and a half. We've gone from $64 a barrel to $74 a barrel in light sweet crude, or in West Texas crude, and we broke out. Relative strength is very divergent on this whole rally. You can see that that the rally has been moving higher. Relative strength has not, or our relative strength has been moving higher, but just making lower highs. So it's going to catch some traders off guard, probably on Sunday when the futures markets open. So you've got to watch crude, and then therefore you probably want to be watching the Canadian dollar and see how that responds, because of the really strong close of the Canadian dollar, weak US dollar Canadian close, which I'm going to talk about here in a few minutes. But I want to continue to talk about other things that are happening this week as well, because that's not it. It's not just tariffs and trade dispute or / wars going on. We do have a busy week as far as economic data goes. So on Monday, the U.S. is releasing ISM manufacturing. UK has their manufacturing purchasing managers index as well. Monday night or Tuesday morning in Australia, you have the RBA rate decision, which I want to show you the Aussie dollar too. So actually, you know what? We've made it to just Monday, and let's stop really quick and talk about the Aussie dollar really fast and show you what this chart looks like. This is a weekly chart, but look at the daily chart. Look at the way that we closed on Friday. It closed really strongly. Now, one of the key components, in my opinion, of the Aussie dollar, and if you're a ForexAnalytix subscriber, you're very well aware of what was happening here, is we had this move that started in December, and it was kind of, it was almost unwarranted. Well, actually, I want to say it was unwarranted. It was probably all end of year, low liquidity, push higher in the Aussie, and then at the beginning of the year, past December into January, it just kind of continued as traders came back. And that rally that came out of nowhere and for no real good reason, in my opinion, at that point in time, if you think back to the end of last year, we reversed and we hit the 127% extension of the December low, or December low to January high. We came to the 127% extension. You can see how relative strength was divergent as we were moving lower, and that created a bounce going into Friday. So with the RBA set to meet, even though they're not expected to move on rates, if the RBA signals any type of hawkishness moving forward, maybe the Aussie continues to get a lift back towards 75 cents, which would be the breakdown point. Okay, so that's like I said, I haven't even moved past Monday, but that's happening on Monday, and I will talk about the cable here in a second, because in the UK we have all of this PMIs that are being released. Like Monday is the manufacturing PMI, Tuesday morning is going to be construction PMI, Wednesday morning is services PMI. We have Halifax PMI on Friday, and Carney also speaks I believe on Thursday of next week. So like in the cable, let me show you the pound really fast. Here, let's go over to the pound. Okay, and let's go over to the daily chart. The pound has this this descending wedge, and again, if you were a ForexAnalytix subscriber, you are very well aware of the descending wedge. You can see the descending wedge. This is on the 28th, and we even talked about it, I believe, on the 29th. The daily chart was showing a descending wedge, and then obviously on Friday we rallied to the upper end of that wedge, and frankly, if the pound breaks above 132.50, and I've been looking at 133.20. I think I even noted that last week on the week ahead video at 133.20. The pound's going to squeeze. You also have to keep in mind that we had this double top neckline, and I'll show you over here because it's easier seen. Oh, let me get rid of that. This is something that I've been drawing on, but you can see the descending wedge, right? We had a double top completion. We completed on Friday, so we're challenging that descending wedge, trend line. So, if we get above 132.50, that's a pretty good indication that the pound could start to rally, maybe back towards its 200-day moving average, depending on the dollar index. I mean, I think a lot of this, has to do with the dollar, not just the cable, but the pound could start to squeeze, especially if you think about this move since just the springtime. We've gone from 144 to 130 and change. So to revert back to the mean a little bit, back towards the 200-day moving average at 135, 136, that's not uncalled for, in my opinion. All right, so we've got to keep an eye on the pound, especially with so much data happening this week. Now, what else? Let me continue on here. Going into Wednesday, that's obviously the 4th of July weekend. So you're probably going to see liquidity really come back towards the end of the week as traders come back in on the 5th, which then we have ADP non-farm, which is the private sector employment data out of the U.S. Then we have services ISM on Thursday before Friday's non-farm payrolls. And on top of the non-farm payroll data is we have Canadian employment. So let me take a moment and talk to you about the euro dollar. Okay, so here's the euro, since we're dealing with this U.S. data that's coming in at the end of the week. You got the euro dollar that's bounced up towards this 117, and if you don't recall from last week, 117.20. Again, go watch the week ahead video. One of my best trades of this last week for me personally was shorting the euro dollar as it hit this 117.20 level. I think I shorted it at 117.10 because it was the 618 retracement of the this 118 and change down to the lows. The 618 came in at the 1720 level. We reversed aggressively. I took a short at, like I said, 117.10. I closed it the next day at 116 and change. Oh, down here, 116 like 40 or something like that. It was a good move. We continued lower towards support, but here we are threatening to make a move above 117. And if we break above 117.20, we're probably going to see 118 again. So the euro, like the cable, could be set up for more dollar weakness. All right, and let's go into I know I talked about the euro. I really want to talk about the Canadian, and I showed you the Aussie. I want to show you the Kiwi, and the Kiwi dollar, really important here as far as the Kiwi dollar goes. You can see the Kiwi has broken down, and matter of fact, I have to actually show you a little bit longer term view of the Kiwi. Let's go over to like a weekly chart. I need to really extend this out, and I know it's difficult to see on the charts if you're looking at just a daily chart, but the weekly chart, we basically are on a multi-year trend line here from post financial crisis lows all the way through these lows, and we tried to close back above 67.80. We closed basically at it, and so how the Kiwi responds here is going to be pretty critical. Again, what we're looking at is the potential for dollar weakness going into next week, and if that's the case and the Kiwi can actually close higher into next week, and we can close back above this like resistance zone, so let's say 68 and some change, maybe 68.50, that'll end up being a false breakdown and quite bullish for the Kiwi dollar, right? But it's not that simple, because if you think about where we're at with all of these currency pairs, and I'm showing you the euro dollar. The euro dollar is kind of threatening potential upside breakout. The pound dollar is threatening an upside breakout. But let's say this trade dispute / war starts to really intensify going into next week. Is it possible that the dollar starts to gain some strength from a risk aversion standpoint? It absolutely is a risk. So before you get too carried away with shorting dollars when you see the Kiwi dollar possibly reversing at support, with the pound dollar looking might break out, I think it's going to be really critical to watch how risk appetite unfolds this week and if the dollar responds to that, because it is quite possible that the dollar is going to respond. Now, let's take a look at the Canadian whoops, I didn't mean to do that. Let's go over to the Canadian really fast. The Canadian dollar, this has been a longer term position of mine, you know, buying this triangle breakout. We did show a reversal, but one thing that we did on Friday is we completed a double top. We had a double top. Neckline was at 132.60. We completed it at 131.31. Okay. Now we closed at those lows, which was important because it's actually the breakout point from back here in March. So we closed at the breakout point. Now, with the news coming out over the weekend about Saudi Arabia increasing oil output, that might put some downward pressure on crude oil, which in turn may cause a gap higher in the US dollar Canadian. A lot of people have been noting that the crude oil prices and the strength in crude is one of the things that weighed down the Canadian dollar, on top of the business outlook survey that came out on Friday, also the GDP data that came out on Friday as well. That kind of, you know, all three of those things really weighed on the dollar Canadian. But you know, the dollar Canadian could bounce back before eventually testing 130, and I do think that 130 is ultimately the place that you want to be looking for longs in the US dollar Canadian, especially knowing that NAFTA negotiations are still ongoing. There is always a risk that the US could walk away from the table in the NAFTA negotiations, which would be very Canadian dollar negative. So I think that any dip towards 130 is going to be bought in the dollar Canadian, and especially if crude starts to weaken, that's just going to be one thing that's going to weigh on the Canadian dollar, that allow the dollar Canadian to move higher. And if you guys don't think that Canada is dealing with their own issues, especially with housing and inflationary lack of inflationary pressures, they are. So Canada, yeah, I would be very hesitant about being too aggressively long Canadian dollars as we're coming into this support. In other words, long dollar Canadian might be something that you want to pay attention to. All right, last but not least, and one thing that I want to talk about here, and I know this has been a lengthy video, but no rest for the weary on the summer. And this is a weekend day, and I'm spending a lot of time just talking about all of this. Let's talk about gold. And matter of fact, let's talk about let's go to the gold futures, and let's take a look at the longer term gold futures chart. Now, I bring this chart to your attention because I tweeted about it on Friday. All right, and we have this, you know, support, long-term support from way back in 2015 lows, and it also came out at a 50% retracement of the last big move in gold, and it created a bit of a bounce there, and gold's pretty oversold. The DSI, or daily sentiment index in gold, has been running in a single digit actually on Thursday, and on Friday it came out at 12, but it's still exceptionally weak, which means the sentiment is very extreme to being bearish, which tends to be a contrarian indicator. So gold, in my opinion, looks like we could bounce here, and if we have a little bit of risk aversion due to trade wars or trade disputes heating up, especially with China's retaliation type of measures towards the end of this next week, gold could see a bounce. I think if you are short gold, you need to be on guard. Now, the question that you're going to be asking is, well, if gold goes up, does the dollar go down? Usually that's the case. You have this inverse relationship between the two. However, If gold and the dollar go up at the same time, then you guys and gals should know that that is pretty bad for risk. That means that if you are, you know, long stocks and gold and silver starts to move higher, there's a chance that the S&P could trade down towards its 200-day moving average, or maybe towards its long-term trend line, which comes in around 2630, which, an 80 or 90 handle move lower in the S&P is a pretty big percentage move lower in the event that that we see some risk aversion. So, guys and gals, I want to reiterate, the prices of ForexAnalytix are going up at the beginning of next week. So that means on Monday. Get your price in today, and you'll be grandfathered in as we move forward. If you're a current subscriber of ForexAnalytix, your prices don't go up. Plain and simple. It's just new subscribers from Monday on are going to be paying a higher price for the product that has been released, that we've had, and we've constantly done upgrades and development upgrades with the mobile application, the front end, what you see here, the back end that we work on, all of that development, that you can lock in these prices now. And like I said, if you're already a subscriber, it doesn't matter if you have an annual subscription and you re-up 6 months from now, you're still going to lock in. You still have your prices locked in now. It's just anybody that comes into the fold from here on out, you're going to be paying a higher price. So this is the time to get in. And guys and gals, if you thought that this video is useful and it's going to be useful to you next week in helping you prepare for your trading week, make sure you hit the like button on YouTube, that thumbs up, and click the bell notification so you can be notified anytime we upload a video, which is, we upload videos all week long, so you can watch some of the great interviews that we bring for you for free on the FACE webinars. So guys and gals, my name is Blake Morrow with ForexAnalytix. This has been your week ahead video for July 1st, 2018. Thanks for tuning in. You guys have a great trading week next week.